Very good morning to all of you. Today we are going to discuss the SLAuS 510, the initial audit engagement relevant to the opening balances. This is a highly popular examination area among CA and I think university exams as well. With that note, let me start. The SLAuS 510, the which standard initial audit engagement. Here we are going to discuss about the opening balances. So you can see here the audit of financial statement for 2021-2022. Auditor is Ernst and Young. The next financial year is starting on, you can see as per these, the first April 2022 and ends of year ending is 31st March 2023. The auditor for financial statement for year 2022-23 is a KPMG. I will tell you here previous year auditor is Ernst and Young. Now the auditor is for the current year, the auditors are the KPMG audit firm, right? The in here we call predecessor or the previous auditor means now in this current financial year 2022-2023, the auditors are KPMG. It implies that the previous year auditors are Ernst and Young. It is differed from KPMG. Therefore, we call EY as a predecessor, or technically we call predecessor auditor. In simple language, it is a previous auditor. The auditor from a different audit firm who audited the financial statement of an entity in the prior period or the previous period and who has been replaced by the current auditor. So you can see in nowadays, the previously the commercial bank audit was done by Ernst and Young. Now in this financial year onwards, it is goes to the KPMG, right? For the so you can see the opening balances. It means in this we took this financial year. You can see 2021 first April 2022 to 31st March 2023. The opening balances at the year end. Those accounting balances that exist at the beginning of the financial period. Opening balances are based upon the closing balances of the prior period. It means in Sinhala, the 2022 31st March, right? 31st March 2022. ඒ කියන්නේ 2022 3යි 31 අවසාන ශේෂය 2022 4යි එක ආරම්භක ශේෂය වෙනවා. ඒක දන්නවනේ. Closing balance of the prior period and reflect the effects of the transaction and events of prior periods and the accounting policies applied in the prior period, right? Initial audit engagement with this is most important. This standard is applicable for an engagement with either the financial statement for prior period is not audited. If the prior period is audit kala naha, if the prior period is not audited, or the financial statement of the prior period was audited by a predecessor auditor or the previous auditor. Now the current year auditors are KPMG, the previous year auditors are Ernst and Young, right? I think it is clear. This is a mandatory to remember. The standard is applicable. If the this year also KPMG, prior year also KPMG, the standard is not applicable at all, right? I think it is clear for you all. Next slide. Let's move to the next slide quickly. So we are going to discuss the CA exam questions as well. One MCQ and 6 marks question. The initial audit engagement opening balances. I told you the objective is in conducting an audit engagement, the objective of the auditor with respect to the opening balances is to obtain audit evidence should be sufficient and appropriate, should be quality and quantities need to be there. Sufficient and appropriate audit evidence whether the opening balances opening balances contain misstatement that materially affect the current period financial statement. Auditors are need to get an objective. What are the objective of the auditor is ensure that no misstatement in opening balances which is impact to the current year's closing balances. Appropriate accounting policies reflected in the opening balances are appropriately and consistently applied in the current financial period, or changes they are to appropriately accounted and adequately presented and disclosed in accordance with the applicable financial reporting framework. So let's say in the prior period, the PPER depreciate by straight line method, but in here in this current period it is reducing balance. It is when we are changing the accounting estimate as per case 8, retrospectively need to be adjusted and proper disclosures need to made, right? Let's say our investment property, so it is optional. We can use either fair value or cost model. So once the fair value yields model is adopted, we can't, as we wish, we can't go ahead with the cost model. If it is doing so, we need to deal with LKS 8, the changes to the accounting estimates, and deal with retrospectively accordingly, right? Right. So now the auditor shall read the most recent financial statement, if any, and the previous auditors report thereon. If the I told you in the prior area KPMG, now it is EY. The previous KPMG report need to be working papers need to be referred by the current auditor, right? Thereon, if any, for information relevant to opening balances, including disclosures as well. The auditor shall obtain sufficient and appropriate audit evidence about whether the opening balances contain misstatement that materially affect the current period's financial statement by determining whether the prior period closing balances are in this year, it is opening balances are correctly brought forward to the current period when appropriate have been restated. Determining whether the opening balance reflects the application of the appropriate accounting policies and consistently adapting application of accounting policies need to be checked the consistency, ensure accounting policies correctly and consistently applied. Perform one or more following, where the prior period was audited by another firm. Reviewing, we can ask for the prior or the previous auditor's working papers to get an evidence regarding the opening balances. Evaluating whether the audit procedure performed by the current period provide any kind of evidence to the prior period. Evaluating whether the audit procedures performed in the current period provide any evidence to the prior period closing balances, means this year opening balances, right? Check the previous auditor's working papers, audit file, see whether the current year audit procedures give an evidence of the opening balances in this year. Perform specific audit procedures to obtain regarding an opening balances. So trade debtor confirmation, we are confirming the both opening and closing balances. Inventory lowering backward calculation is there. Let's say, so in this year, here 31st March 2022. And area period 31st March 2021. You want to get and comfort 2021 31st March audit inventory balance. So you are using rolling forward or backward approach, rolling backward approach to identify that the existence of that particular inventory and the value of that. Let's see simply as the assertions, right? Right. So with that note, building purchasing last year, check original documentation relevant to the purchases. Likewise, we can perform, right? So you can simply remember these three also very much important. What are the audit procedures, right? Definitely tested. So nextly, we move to the for current asset and liability, some audit evidence about opening balances may be obtained as a part of the current period's audit procedure. For example, collection payment, audit opening account receivable, account payable during the current period will provide some audit evidence in their existence. I told you, right, an obligation, completeness, and valuation, those blah, blah, blah assertions, right? In the case of the inventories, observing current physical inventory count and reconciling to the opening inventory quantities, I told you the forward, no, not forward, backward rolling approach. Rolling backward approach should be there. Reconciling, right? Performing audit procedure on the evaluation of the opening balance, performing audit procedures on the gross profit and cutoff, right? For non-current asset liabilities, some audit evidence may be obtained. Examine the accounting records and other information underlying opening balance. In certain cases, the auditor may be able to obtain some audit evidence regarding opening balance through confirmation with third parties. For example, long-term debt and investments, right? Bank confirmation likewise. The consistency of the accounting policies, the auditor shall obtain and comfort sufficient appropriate whether the accounting policy reflecting the opening balance have been appropriately consistently applied in the current period financial statement as well. Whether changes in accounting policies have been accounted for the properly adequately presented and disclosed in accordance with the applicable means LKS 8, right? Prior previous balances audited by previous auditor. When the prior period balances are audited by financial statement are audited by previous auditor, in currently it is KPMG, prior EY. The current auditor must read the most recent financial statement and the previous auditor's report for the information relevant to the opening balances. The current auditor may be able to obtain sufficient and appropriate evidence regarding the opening balance by performing this review depending on the professional competence and kept some independence and the predecessor auditor, right? Professional competence and the independence of the predecessor auditor, right? Relevant ethical and professional requirement guide the current auditor's communication with the predecessor auditor, right? if there is a modification to the opinion in the prior period, the current auditor must evaluate the effect of that matter giving rise to the modification in assessing the risk of material misstatement in the current period financial statement. So you can remember the prior period balances audited by previous auditor. In all cases where there is a new auditor, the audit report must contain an other matter para. I told you this is the CA exam one time. CA exam question I will show you at the end of this session. The prior period balances audited by a previous auditor, right? In the cases we are a new auditor, let's say now it is KPMG, previously it is EY, Ernst and Young. The all the cases we are the new auditor. The audit report must contain an other matter paragraph. Other matter paragraph is not very incorrectly. Other matter, not emphasis. This other matter para is because the what is the different emphasis of matter is given if it is already disclosed in the financial statement. Other matter is the matter that emphasizing, which is not included in the financial statement as a disclosure, right? So in all the cases where the new auditor, the audit report, other matter paragraph, this applies whether or not the audit opinion being expressed is modified. This is not a modification to the audit report, right? Other matter, the financial statement of the John Keel's, Commercial Bank PLC for the year ended 31st December 2022, audited by another auditor who expressed an unmodified opinion. Likewise, we are saying but it can this is important one. Yes, my eraser, important one. The audit opinion, so you know that if it is a scope limitation and the misstatement is there, how to deal with in line with SLAuS 701 modification to the financial statement, unable to obtain sufficient appropriate evidences, which is scope limitation. In the scope limitation, if it is material but not pervasive, it is qualified, and material pervasive now. We are not expressing any kind of opinion, disclaimer of opinion, disclaimer of opinion. Secondly, you can see a audit conclusion and reporting. Opening balances contain misstatement, materially affect the current period. Materially affect the current period is a misstatement. If it's material but not pervasive, it is qualification, except opinion, except inventory, others are free from material misstatements. Material and pervasive now. We are adverse opinion. We are saying that these financial statements not represent and true and fair, right? That note is important. I think you know that in second year first semester also you had that one, right? The accounting policy is not applied consistently because it is not a scope limitation, material but not pervasive. Again, qualified, material and pervasive, it is adverse. If it is a scope limitation, material and not pervasive, it is qualified, material and pervasive, it is a disclaimer. You want to remember, don't memorize, don't by heart, take a logic, right? Audit conclusion and reporting, the previous auditor's opinion modified if it is a qualified opinion in previous year. Consider whether the issue remains relevant and still it is not resolved in the current period, and the modified opinion accordingly. It can be a qualification, it can be a adverse, or it can be a disclaimer, right? Based on the situation. For example, if the prior period audit opinion qualified on the material misstatement and the financial statement still misstated in this year also we are qualify the audit report, audit opinion, right? These things in the syllabus. Let's look at the CA Sri Lanka paper, right? In order to get and comfort, right? Here it is one of the paper. I think you can see my screen now. One of the paper, it is asking MCQ question, right? It's easy, not that much hard. Actually, it's not hard. You work an audit firm, the audit manager. You are not an audit manager. You are like after you are qualifying, you are audit manager. Let's say Janidu made the following statement in relation to the initial audit engagement 1, 2, 3, 4. Which of the above statement are correct? That explain the initial audit engagement as per SLA US 510. The initial audit engagement of the opening balances the engagement in which the company finance statement for the prior period not audited. Yes, it is correct. The engagement in which the company prior period was audited by another audit firm other than you. Yes, it is audited. The engagement in which the company first finance statement are to be audited by another firm. No. the engagement in which the finance statement for the private audited and audit opinion. No, it is wrong. And 1 and 2 answer is A is correct. Here, I will show you where is it is. Right, you can see here. You see here, right? The stand is applicable in only two circumstances: the financial statement for the private not audited, or the financial period private audited by a predecessor auditor. Right? With that note, we conclude this part, and now let's move to the third one. Right? Right. So let's move to the question now. So now we are concluding this session, and question number 7, one of the long type scenario in the CE examination. It asking one question, 6 marks. Assess the impact of the opening balances audited by predecessor auditor. It means it's the second scenario. Now it is EY, previously it is KPMG. Let's say assess the impact of the opening balances. Assess, you want to elaborate. 6 marks means you can't just write here and there. You can't write, right? No marks is given. Assess the impact of the opening balances audited by predecessor auditor on the audit report on the beta core. So let's look at the company's nature first. We are not going to elaborate. Sigma Private Limited is a manufacturing company involved in solid rubber tires. Sigma operates two factories, one of the natural rubber and the other one is recycled rubber. However, due to lack of recycled rubber and the defective plant, the performance of the solid tire factory was that uses recycled rubber is not satisfactory. Sigma control environment is assessed to be strong, and the finance function is led by qualified and experienced chartered accountant. And he's supported by another chartered accountant and partly qualified accountant. Okay. You are the engagement manager. You are the engagement manager of Betaco, responsible for the audit of Sigma company statement for the year ended 31st March. You are reviewing the progress, auditor's expert. It is not relevant for this. Borrowing is not relevant. Lawsuit not relevant. It is relevant. It is mentioned the predecessor auditor. It means opening balances. What is the financial year end? Financial year end. Go. 31st March 2021. 31st March 2021. I writing here. 31st March. 31st March 2021. Then the opening year, the beginning, what is that? 1st April 2020. 2020. Right? Betaco is performing the audit for the first time as the ownership of Sigma had changed. Beta & Co. It's Beta & Co means I mean audit firm, right? I don't know. Yes, your engagement manager Beta & Co. It is audit firm, right? Beta & Co. is performing the Beta & Co. is performing the audit for the first time. This is the first time as the ownership of Sigma had been changed. Important change in last year, and new owners had appointed by Bitaco. Owners had appointed Bitaco. The audit team had visited the predecessor auditor to verify the opening balances and to review audit working papers of the previous auditor. Let's say now it is KPMG, previously EY, right? The audit team had noted that sufficient audit procedures had been carried out and unmodified opinion on the financial statement of the previous year had been issued. Right. What is the audit opinion? Since you can write here, since here the CA Sri Lanka examiner's answer, I'm reading, I'm rushed through, I'm not going to this time. Since the financial statement of the Sigma for the year ended 31st March include corresponding figures, which is not audited by current auditors. So comparative information, you have corresponding figures and corresponding financial statement where the corresponding financial statements, comparative financial statement is not applicable in Sri Lanka, but corresponding figures is applicable. Here you can see the corresponding figures. We are showing in previous year, like the Haley's PLC, where is that? Here you can see. Here me for consolidated, let's say company consolidated. Me api then the 24 23 pennanne. But here in the what is the difference between the corresponding figures and the comparative finance statement? Here in the corresponding figures we are giving opinion to the current period as well. Not only for the current period. Api current period එක විතරයි opinion එක දෙන්නේ. corresponding figures. Well, we are giving opinion for the financial 31st March, right? 31st March. 31st March. In our opinion, the company financial statement of the company and the group give a true and fair view for the financial position of the company and the group 31st March, right? Not for the both year, but in the comparative financial statement, you can refer the April's annual report, right? If you need to further study the comparative financial statement, right? Not that much examinable. Right, so I think now it is time to focus since the financial statement of Sigma for the year in the 31st March 2020 include correspondence figures, yes, which is not audited by the current auditor, which is brought to users as entry because they are asking the auditors report impact, right? Audit report, on the audit report, right? To careful. It will be brought to the user's attention. This is presented in the audit report. මොකේද පෙන්නන්නේ? මේක opinion එකේද basis for opinion the key audit matter මොකේද පෙන්නන්නේ? Emphasis of matter the other matter paragraph. Emphasis of matter කියන්නේ already financial statement වල disclosure එකක් විදියට අපි දාලා ඒක අපි පොඩ්ඩක් emphasize කරනවා. නමින්ම දෙනවා අපි නිකන් උලුප්පලා වෙනවා. Emphasize. But here it is not included in the financial statement, the disclosures, the prior period is audited by another previous auditor, but it is not bad there. As auditors of the current period, as the action we are mentioning it under the audit report or the meta para. This is presented is another matter paragraph in the auditor's report. It is not a matter that is disclosed in the financial statement. I told you, this is not that much they are in the financial statement. As described above, the auditor considers it is necessary to draw the user's attention. We draw your attention to what is relevant for their understanding of the audit. In the current year, auditor should ensure consistency of the accounting policies adopted by 2 periods and also whether the previous accounting closing balances period closing opening correctly brought forward කරලා තියෙනවද කියලා අපි ensure කරන්න ඕනේ. The auditor considered that the current period accounting policies are not consistently applied unless the opening balances or changes have been not properly disclosed. We are giving a qualified or adverse opinion. Disclose, the auditor shall express qualified or adverse opinion. Accordingly, the auditor can state that the financial statement for the year in the 31st March 2020, we are audited by another auditor. The previous auditor has an unmodified audit opinion on those financial statement. You can see accordingly, the auditor can state the financial statement of the previous year, the 31st March 2020, audited by another auditor, let's say KPMG, and the previous auditor, the previous auditor is issued an unmodified opinion. You can see in the lecture slide also, it is there. No, not here. Mistaken for head people. Here it is there, right? Emphasis of matter, not emphasis, other matter. Here, as it is there, and CNC here also tested, right? You can easily score if you are good enough. Right? Thank you so much for this part. Thank you.